Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Here is the quarterly chart of USDJPY, also known as the 3-month chart. Since 1987, the pair had been in a long-term downtrend. That trend was eventually broken, and after reaching a major high near 161, price has pulled back. I see this as a range phase following the previous downtrend. On this long-term time frame, the key level to watch is around 121.5. The market has lost direction for now, but if price breaks above 161, it would confirm a new long-term uptrend and could lead to a strong bullish phase. Next, let's move to the monthly chart. Here, we can draw an ascending channel. Since hitting 161 in July 2024, upward momentum has slowed, but strong buying pressure continues to appear around the 140 level, where price has repeatedly bounced. This structure can also be viewed as a potential head and shoulders formation, with the neckline near 140, the shoulders around 151, and the head at 161. Last week, the pair rose and closed above 151, ending around 152.86. If the October monthly candle confirms above 151, a further rise toward 161 could come into view. Conversely, if the monthly close falls back below 151, the head and shoulders pattern may remain in play, and price could continue to fluctuate between 140 and 151. Although still distant, if price clearly breaks below 140, a deeper correction on the monthly scale should be expected, possibly toward the lower boundary of the channel, and the quarterly key level around 121.5. Keep that area in mind as a long-term reference point. Since this week marks the monthly close, the battle around 151 will be crucial in determining the medium to long-term direction. Here is the weekly chart of USDJPY. We can draw an ascending trend channel on this time frame. Since July 2024, the highs have been gradually declining, and within this broader uptrend channel, a red downward trend line can also be drawn. Last week, price successfully broke above the key 151 level, which had acted as resistance since early August. The next potential upside target is near 154.2, where the price may meet the descending trend line within the channel. On the downside, the 38.2% Fibonacci retracement of the rise since late April 2025 lies around 148.16, and the 50% retracement near 146.5. A pullback to these zones would still be considered a normal correction within the uptrend. However, if price closes below 146.5, we should stay alert for the possibility of a deeper decline. Now, let's move to the daily chart. In early October, price gapped upward, breaking above both 149 and 151, and climbed as high as 153.27 before pulling back. Last week, the pair retested 153 and closed around 152.86. To the upside, if price clearly breaks above the recent high near 153.3, a continuation toward 154 or higher becomes possible. Although price is now trading above the yellow 200 SMA, the moving average still slopes slightly downward, suggesting that a stronger uptrend may take more time to develop. To the downside, we should watch for possible pullbacks toward 151 or 149, levels that have acted as key supports and resistance in the past. If the green upward trendline breaks and price falls below 146.5, it would increase the risk of a larger correction, so traders holding long positions should stay cautious. This week is particularly important, not only for short-term movements, but also for defining the medium to long-term outlook as the monthly candle closes. Let's stay calm and focused. Keep long-term analysis in mind, and approach the market with discipline throughout the week. Thank you for watching today's analysis. If you found it helpful, please subscribe and hit the bell for updates. Let's continue to approach the markets with patience and discipline. See you in the next outlook.